Buying a home should be exciting, but for many people, it is not. It is stressful, it is worrisome, and you don't even know where to begin. Sometimes that holdup is just on basics terminology. You may feel like you are learning a whole new language and you need to pull out the dual lingo, but that is not true.
So we just want to go over a few things with you to help you know what the lingo is, the lender jargon, um, so that you'll feel like a pro and you'll like your experience and understand what you're going through.
So I'm Katie McDaniel with Keller Williams Realty.
I'm Annie James with Evo Mortgage.
And we're going to talk today about lender lingo and real estate jargon so that you're empowered to move forward and no longer be afraid. So one of the first things you're going to do is kind of figure out, if you're financing, figuring out where that is going to happen. And the two basics are brokerage and bank. What are the difference between the two?
So there's a big difference between a brokerage and a bank. So a bank is kind of a comprehensive lending institution. So if I'm going to buy a car, the very first thing that I'm going to do before I set foot at a car dealership is I'm going to go to my bank and I'm going to see how much I can get pre-approved for, and see what that payment scenario looks like. So, that I'm going to feel comfortable with that monthly payment. And then I'm going to get all of that set up, and then I can walk into the car dealership, know what my budget is, and have that check in hand and be ready to make a deal. So banks are great for things like that. They house all of our assets. So they've got take care of our checking accounts. If you have certificates of deposit, savings accounts, checking accounts, all those things are great things that our banks offer us. A mortgage brokerage specializes in only mortgage lending. So that's going to be your go-to when you want to buy a house. We have so many different loan programs and lenders to choose from. I've got over 50 lenders that we can choose from. So when it's time for you to get under contract, we can choose the lender that's giving the best rate that day and the best loan program with that lender and tailor that to your specific needs.
And who wouldn't want a better rate? I know that is a big discussion these days. All right, so we've picked our lender, and the next thing the lender is going to do for us is get you pre-approved or pre-qualified. What's the difference between those?
So a pre-qualification really isn't even worth the paper that it's written on. That just means a lender has looked at your application and looked at your income and said, yes, they can buy a house. A pre-approval is a lot more in depth than that, Katie. So what your pre-approval process is going to entail that your lender look through your financial assets. They're going to analyze your debt to income ratio. They're going to analyze your income. They're going to search through your credit report to see if there are any red flags such as foreclosures, bankruptcies, tax liens, all those kinds of things. They're going to determine if you are credit worthy enough to purchase a house, and they're also going to give you those figures that you can afford and go over those payment scenarios with you on an actual pre-approval so that you're not looking at $400,000 houses with Katie if you're only approved for $250,000. We want to keep you shopping within your budget and within the price range that is specifically tailored for you.
And there's a way to take this to the next level and give you a secret weapon, especially if you find yourself in a multiple offer situation, and that is underwriting.
So my brokerage will get you underwritten at Evo Mortgage. We can underwrite you, get you fully underwritten before you even get under contract, so that once you're under contract, we only need a few documents plus your appraisal to close your loan. So that can give you a big advantage while Katie is writing your offer to a listing agent. That can give you a big advantage. We can typically close quicker.
So the underwriter, what does the underwriter exactly do?
The underwriter has all of the power in that situation. So the lender gives that underwriter power to make sure that the borrower is financially stable and that they have the means to pay back the debt that they're borrowing. So the underwriter basically scrutinizes everything about the borrower to make sure that that borrower is going to repay that debt.
Love it. So keep that in mind as you're shopping around brokerages and banks and deciding if you're doing a pre-approval or if you're taking it all the way to underwriting. Some of the things that the underwriter is looking at and your lender is looking at before it even gets to underwriting is debt to income. Can you break down that?
Sure. So your lender is going to analyze exactly that, your debt compared to your gross income that you have coming in. We get your debts from your credit report. So that can include anything from your credit card payments, like monthly obligations that show up on there. So if you have any liens, if you have student loans, all of those things go into the debts that are on your credit report.
All right.
And we analyze all of that for you. So we do all that work to get you prepared for home buying.
Yep, we want you to be successful. Reserves, that's another term you're going to hear during this process.
Yes.
What is a reserves and why is it important?
Really, reserves is just another term for money. We want to make sure that you have money in accounts that we can see, so to prove to the underwriter that you're credit worthy enough. And these reserves can be in the form of a 401k, a retirement account, a checking account, a savings account, a CD, anything that you can liquidate to use towards the purchase of this house. So let's say that you got in a car wreck or you were sick and you couldn't work for a few weeks. What we want to make sure is that you're able to repay this debt if you were off from work for a few weeks and didn't have an income.
All right, so debt to income reserves and closing costs.
Closing costs. There are a lot to that. So we're going to just kind of lightly skim over this. We're not going to go over every single thing on there because it would take us all day, Katie. So your closing costs are going to require things like the fee to file and record your deed with your county, prepaid items. So this is like your homeowner's insurance. We're going to collect that for a year. Plus a little bit of cushion in case that goes up. It's going to include if you have mortgage insurance.
The deadly PMI that so many people have heard about.
Yes. So if you have an FHA loan or a USDA loan, you're going to have mortgage insurance. If you're doing a conventional loan and you do not put 20% down, you're going to have mortgage insurance on that loan. Your other prepaid items are going to include like your property taxes and your prepaid interest. So with your prepaid interest, sometimes that can get tricky, but it's really not as difficult to understand as people make it out to be. So let's say you close in March and then you get to skip April's payment and your first payment is going to be due May 1st. So that month that you close on your closing month, you're going to have to pay prepaid interest. So let's say you close March 25th. So you're going to have to pay prepaid interest from March 25th to April 1st. So the later in the month you close, the less of that prepaid interest that you will acquire on those loans.
And I think the other biggie on there that we get a lot of questions about is title insurance.
Yes. So with title insurance, I recommend it on every single transaction. I would personally never buy a house without title insurance, and any title attorney would encourage you to get this. It is not required, but
you
it is
usually have to sign a waiver
You
if you don't want it.
So let's say you're buying a house, Katie, and the previous owners bought a pool. And they paid a contractor $10,000 to install that pool in their house. Well, let's say they skipped on some of those payments and didn't pay that contractor what they were due. Well, what can happen is that contractor can file a lien with the county. They can file a lien against that property. Well, you own that property now. You're buying that house. So guess who that's going to be attached to if you don't have title insurance?
Because it goes with the property, not with the owner.
Right. Correct. The lien will stay with the property. So if you've got title insurance, it takes care of that debt.
All right. Pity. We hear pity a whole lot. P-I-T-I. Can you break that down?
Yeah. So that's just an acronym that a lot of lenders use. And it includes the 4 things in your mortgage. So it's going to include your principal, your interest, your taxes, and your insurance. So that's what those 4 things make up your total monthly mortgage payment.
All right. Impounds, escrows.
Okay, so that's basically just your escrow is just a savings account that your lender is going to set up for you, and they're going to put the prepaid money that you paid for your homeowner's insurance, that cushion for your taxes. They're going to put that in that account so that when those bills come due, they're paid on time.
And you don't have to worry about paying it.
Right, and your lender wants that done because that guarantees
it's
their
paid.
investment.
Yep.
Yes.
All right, so now we have our numbers together. You've talked to a lender, you're pre-approved, you're ready to look, you know much how you can afford a month, and then part of that is figuring how much you want to pay, because just because they told you can doesn't mean you have to. So know that number that you're comfortable paying a month.
Yes.
And at that point, then we can start looking at houses. We don't want to do this beforehand, because I had somebody talk me into it once, even though I said I wouldn't. We went out, we looked at a house, they swore to me they were good. They fell in love with this house, and they said, okay, now I'm ready to talk to a lender. As soon as they talked to the lender, there were surprises on their report, and they were not able to purchase at that amount. Well, now any other house we look at their price range is not going to work because they're already in love with the one that is more expensive. So never look at houses without having your pre-approval. But there's terms that are going to come up on the real estate side too as we start to look.
Yes. So tell us what MLS is. We hear that term all the time, Katie. What is MLS?
So the MLS is the site that realtors put their information in at. This site then feeds out to realtors. Realtor.com, Zillow, Trulia, Redfin, all of those get their information directly from the MLS. What is important about this? This has the most accurate information because it's kind of like telephone tree. As it goes out, sometimes the information gets distorted as those sites pull the information in. So the MLS is the main site for any information submitted by realtors.
Okay. Well, tell us what we hear the terms. It's pending contract or this is under contract. What does that actually mean?
So once you have an offer accepted, whether you're a seller or buyer, you're technically either under contract or pending, and they're similar. It just means you've had an accepted offer. So when you look online, you're going to see three different things if somebody's accepted an offer. You're going to see under contract, pending, or contingent. Under contract usually means, but not always, like, hey, we've accepted an offer, but we're still willing for people to come in and look and potentially give us a backup offer. Pending means we're shut down. We don't want anybody else in here. We've accepted an offer and we're going to see this one out. You'll sometimes see contingent. Contingent on some sites just means they're pending or under contract. It could also mean the seller's accepted an offer from a buyer who is contingent on selling their house.
Okay, got it. Okay, so what is this earnest money talk? So earnest money or good faith, what does that mean?
Earnest money or good faith is the money that you are going to put down once your offer is accepted and not until you have an accepted offer. This is to show the seller that you are serious about this offer. So if for a contingency, which is a contingency is a way to protect you from unforeseen disasters and allow you to get out of the contract if you need it. And the contingencies that are typical that we're going to see are inspections, financing, and appraisal. And sometimes we'll see it on the sell and close of the house.
Okay.
Usually earnest money deposit is like 1% of the sales price. So if you're doing a $200,000 house, it would be about $2,000, or sometimes lower, $1,000 up to or down to $1,000. This money, as long as all contingencies are met, will go to the purchase of your house.
So you get that back?
Yes. Or if because of one of your contingencies it falls out, you would actually get that money back.
Got it. Okay. Well, what is a competitive market analysis? What does that mean? We hear that term a lot.
We do. So I usually will just say, because I caught myself saying that a lot. Nobody knows what I'm talking about. So I usually say, I'm just going to go check how this house is priced. That's basically it in a nutshell. I'm going to see what sold in the neighborhood or locally recently. I'm going to try to get as close as condition and style of house that I can. I'm going to see what's pinned it to, because that's important. That can affect the price and what's been on the market recently, to see if they have it priced as they should, or if maybe they're pushing that boundary and wanting more money than it's worth, or even sometimes they price it low and we know we've got a deal there.
So you're basically just comparing it to other houses in their area in their specific market.
Exactly.
Okay. Another thing that we need to touch on are counter offers. What's a counter offer, Katie?
So counter offer is always a great thing. It means the other party is willing to continue the conversation with us. It could be like we submit our main offer and they counter offer us back. They may accept like your price, but change some terms or change the price and leave terms. It is good because we're continuing that conversation. Sometimes they will be like one counter offer. Sometimes they accept your offer outright. Sometimes they reject you outright and they say we're not even close. And sometimes counter offers can go back and forth for a while before somebody says we're not getting there or that everybody agrees to it.
So it's like if you go on the Toyota dealership and you say, hey, I want to buy this brand new Camry, but I'm only going to buy this if you throw in the free tires for life kind of deal.
Exactly.
Gotcha. All right, the last thing that we need to talk about is closing.
And this is the day this whole process has been waiting for, right? On closing day, this is the day that everything becomes official. You're going to close on your financial paperwork. And if you close with Annie, it's way less than anybody else.
We do hybrid closings.
Everybody else, you're going to want to have your wrist and hand stretched out and ready to go because it's a lot of paperwork. You're going to get keys usually on that day as well and be able to walk and go into your new house.
Yay. So you get the keys to your house. You have to sign the paperwork at the title attorney's office and you're finished.
We are.
Yay.
We're ready to go.
You're a homeowner.
And hopefully by this point in this conversation, touching on some of this jargon and lingo, hopefully you're feeling a little more comfortable about what is out there and what you're hearing so that you're willing to take the next step.
Yes, hopefully you're feeling less confused, less frustrated, and ready to take that first step with us.
So if any of this is interesting and you're feeling a little more excited and want like a one-on-one personal consultation with us to chat about your options and what's possible, please text me or
Annie.
The numbers will be showing up here and we'll get a time set up so we can chat. So hopefully we'll talk to you soon.
Can't wait to do business with you.